In 2025, properties in high demand areas are often being snapped up within days, sometimes within hours, and often well above the asking price. If you're trying to buy a property right now, maybe you're feeling a little bit stuck, a little bit overwhelmed. You're seeing property prices grow, you may be missing out on offers, and you're being outbid by all the competition that's going on in the market. By the end of today's episode, you're going to know what you need to do to secure a property in a highly competitive market so you can avoid paying too much, but also avoid missing out. Hey, if you're new here, I'm Steve Williams. Welcome to the podcast. We talk all things rent vesting, property, and getting ahead. I've been a property investor myself for 16 years, and I've helped tons of people across the country get into the market and become a rentvestor. I've been rentvesting myself, and I see it as a great strategy to help get ahead. I'm also the founder of W Property Advisory, and in my day-to-day, I help people buy properties in highly competitive markets, and I know what it takes to get a deal done. All right, so in today's episode, we're going to talk about three things. Number one is, what is causing this competitive market? Why is it just absolutely bonkers out there? Now, I'm not talking about everywhere because different parts of Australia are in different cycles right now, but I'm talking about the highly competitive markets. And to give you an idea of some of the locations, I'm talking about parts of Queensland, Perth, and also Melbourne, which is starting to heat up as well. Number two, I'm going to give you how you can quickly assess the value of a property in under 2 minutes. There's a little bit of an art to it, but I'm going to break this down for you. And finally, how do we actually put an offer in that's likely going to be accepted? And you can do this even as a rookie, but I'm going to share my expert tips to help you succeed. But real quick, guys, down below, there's a link. You can do a quick quiz, which is going to tell you exactly where you're at in your current situation and what it's going to take for you to become a successful property investor. So click the link below and give the quiz a shot. All right, so what is actually driving house prices in 2025? Why are we seeing some markets so competitive right now? Well, I want to firstly talk about the macro environment in a nutshell. Well, during the last couple of years, we've seen a lot of overseas migration to the country. I'm talking hundreds of thousands of people, which is ahead of the long-term average. And this means that these people have needed somewhere to live. And this is therefore creating a demand for rentals and then also a flow-on effect for also people wanting to purchase a home as well. So places like Perth has grown, the population's grown massively. Like last year, it grew around 2.8%, which is the fastest growing state. In the latest ABS data, we also saw that Victoria was the second fastest growing state at 2.1%. So whenever there's more people, they obviously need somewhere to live, and therefore the demand is outstripping the supply. Now, let's talk about the supply factors as well. Now, the reason why we're having a shortage with supply is because they're simply not building enough houses. And in my other episodes, I've talked about the numbers, but some cities, we're talking like tens of thousands of houses short of what the population needs to sustain. So for example, Perth, it's had about 9,000 properties constructed, where it needs around 20,000 homes to actually keep up with the demand. This is quite similar in Melbourne, although the construction in Melbourne's a little bit more stable. They're able to produce more homes, and there's also a lot of greenfield estates on the outskirts, which is definitely adding some supply. But the demand is still outstripping the supply. A lot of people are moving back to Melbourne, and we're also seeing that people are moving out of, I guess, their house share situations, and therefore this is creating that demand as well. And this is following, I guess, the COVID period, which was quite harsh in Victoria. And now people are wanting to, I guess, get a home, get some bricks and mortar, and start to create their new life. Some other factors that are more recent is that the first home guarantee, while it has been in place for a little while, meaning you can buy a property to 5% deposit, there's been some caps on it, which hasn't been favorable. But with the Labor government that's just been elected, we're going to see that as of next year, that this is actually going to provide a lot more opportunity for first home buyers to get into the market. And word on the street, I'm hearing from a lot of people already that this has actually been the kick, or I guess the handout that they've been waiting for. And I really feel like later this year and early next year, we're definitely going to see an increase of buyers trying to get into the market, again, creating more demand. The other factor is interest rates. They have dropped down 0.25. We may see another interest rate cut coming up very soon. and there may be a whole series of interest rate cuts this year. Every time that happens, it actually gives people more borrowing capacity, meaning they can borrow more money. So when they previously could maybe only afford a house worth $500,000-$600,000 with more borrowing capacity, and on top of being able to use a 5% deposit for their home, they could then go on to buy a property, say $700,000-$800,000. It means that there's more people that can buy at the next tier up, creating more demand and more competition. Now let's take a look at your local market. I've talked about the macro factors, like the bigger picture things about what's going on. But let's talk at your local market. Now, some areas are actually quite flat. Places like Canberra, at the moment, some places in New South Wales are reasonably flat, and also some other regional locations as well, whereas other regional locations are doing really, really well. You need to take a look at what's going on in the local environment. So speaking to real estate agents, going to open homes, seeing how quickly properties are selling online is going to give you a bit of a taste for what's going on. And I guess what we would call a hot market is if we see that there's like 10, 20, 30, 50 groups of people going through an open home, and then a home's getting anywhere from say 3, 5, 10, even 20 offers on a home. And this, we are seeing this in parts of Australia right now. So when you think, okay, the property market's quite slow, I guess that could be your local environment, but the picture could be very, very different for other parts of the country. Now, if you're wanting to be a rentvestor, of course, you could buy in one of these slower markets and then aim for some capital growth in the future. Otherwise, if you're wanting to get into one of these hot markets where the prices are growing right now, you can create some equity now and also, I guess, build your wealth sooner. Well, this podcast episode is going to be really important for you because buying in one of these markets, I guess it is competitive and it does take a little bit of work to secure a property. You don't certainly want to have FOMO and just go crazy because this could essentially, I guess, tarnish your opportunity for the future. But on the likewise, if you buy in a market that's growing, then you can potentially get ahead right now rather than buying in a slow market where you may have to wait 3, 5, 8 years for the market to turn around. And I've also made this mistake. I bought in a place where it was quite slow for many years. That was my first property. It took 5 years before the property actually did anything, meaning that it had big holding costs and it wasn't necessarily worthwhile buying at that point in time. I could have bought in other markets that was likely going to perform better. Now we're going to jump in a second. I'm going to show you some actual examples of some properties that we're looking at for clients. I'm going to show you how to actually value the property in less than 2 minutes time. There's a little bit of an art to it. There's a science. In fact, there's university degrees out there and property values, but I just want to give you the basic tips on how do you work out what sort of an offer should you place on a property. Guys, I'm going to jump in. I'm going to show you an example right now. All right, so this is actually a real life example, a property at 20 Tower Hill Road in Frankston. It's a 3x1 property and the online estimates are saying $743,000. Now, this is why you shouldn't listen to this information here. You're going to see by the end of this why this is actually worth totally ignoring because it really doesn't mean much. They're often widely inaccurate and you really need to do a little bit more work than just rely on this information just here. But the property was built in 1960. It's 622 square meters and we can take a look at some of the photos here. Now, as you can see, it presents nice and tidy. It's freshly painted, new bathroom, or I guess fresher bathroom, very basic backyard, but overall, it's got a little bit of character to it. Now, this home we're looking at, it's actually off market, so you can't buy this on the market. But even if you have a property that you're considering online, you can look at the listing online to get a little bit of a feel of the block size, the condition of the property, and also the positioning. So we might want to also have a look at the map. We want to see, is it on any busy roads? Is it anything that's undesirable about the property? As we can see for this one, there is a bus stop out the front. It is on a corner as well, which may or may not be attractive for some people. But you've also got shops not too far away and just sort of down the road from the Frankston town centre. So they're the basics here. The other thing we know about this property, it's in a desirable high school location, the Frankston High School catchment. So people often do pay overs for this one. So what we want to do first is once we've got an idea of the property, we then want to head over to realestate.com.au or Domain if you prefer it. Now, as a buyer's agent, we have other tools that we use as well. For example, RP Data, Price Finder. But this is a very easy way you can do it for absolutely free. What you want to do then is type in, or firstly go to the sold tab, and you want to type in the suburb. So you go Frankston, Victoria, and let's take a look to see what's sold recently. You can actually refine it further. Let's say 3 bedrooms and 1 bathroom, and let's go search. You could also, if you wanted to, put in the block size and any other features that are relevant. So for example, let's say 500 square meters up to 700 square meters to kind of cover that range that this property falls within. So these are some example properties that sold recently. Now, we ideally want properties as recent as possible, ideally within the last month. Now, even though they say this month, it may, the actual transaction may have taken a little while ago, but the most recent they are, the more relevant they are. Certainly in a growing market, because some markets we're seeing prices go up $5,000, $10,000, $15,000 a month. So we really want to have something that is apples for apples to make sure we compare. Now, I've actually shortlisted a few already. Now, let's take a look at this one. It's 775 square meters. It's a 3x1, $840,000 this one sold for. Now, it's got a lot of charm to it as well. If you're listening into the podcast on Spotify, feel free to jump onto the YouTube as well, because we're actually going to show you some photos of the property. But you should be able to follow along with the audio conversation here. Again, this property presents quite nicely. Let's go to the next one. And we can see 72 Frankston Flinders Road, 580 square meters. It is also a 3x1. Presents nice and tidy, a little bit more dated, but overall, fairly nice, tidy property. You can also go further and look at the description of the property to see if there's anything that's desirable or not desirable. Of course, look at the location, the map location of the property to see if there's anything. So look, this one here, it's actually on a fairly busy road or not far from the highway just here. So again, that's going to sort of devalue that property a little bit. Now let's go to the final one. So 37 Robert Street, Frankston. This one's a 3x1. Again, nice and tidy, presents quite well. You know, nice little cottage. Now this one sold for $838,000 in March, the 22nd. This one is nice and close to the university campus, Monash University campus, and again, just down the road from the Frankston Town Centre. Now we've looked at 3 properties, and these are some of the most recent comparable properties. Then what we want to do is do up a little bit of a table here. And if you're watching on YouTube, you can see I've broken down these properties. So you can actually see now what we've said is 20 Coogee Avenue. We've said essentially the improvements are inferior. It's a little bit more dated. The location is similar. It's a larger land size, and overall it's a slightly inferior property. And that one sold in March for $840,000. Then 72 Frankston Flinders Road. That one is similar improvements, inferior location because it's next to a busy road, and it's got a smaller block size. Overall, it's an inferior property, and that one sold in November for $780,000. And then we've got 37 Robert Street. That one is a similar improvement, similar location, similar land size, and overall similar property. That one sold in March for $838,000. Therefore, based on these comparables that we're seeing, we're estimating this property to be worth around $830,000 to $850,000. Now, in between March and May, of course, there would have been property growth as well. We also need to factor that in. As I said, in some hot markets, when there's a lot of competition, prices are going up by $5,000, $10,000 a month. So we also need to take that into account. Now we have a bit of a perspective of what properties are actually worth compared to the comparables. We've got a little bit of a guide. Now let's take a look at that. So that's $850,000. Now let's go back to the online estimate for this property in question. The online estimate said $743,000. So as we can see, based on our comparables, it's very far short of what the property is actually going for in today's market, even though it says that it has high confidence. All right, so as I've shown you, relying on the online tools is really not worth your time, and it can actually give you a bum steer. So what do you actually want to also take into account? You want to talk to the agents, as I said, get a feel for where the market's at, Also find out how many offers are going in on properties. And if you're seeing that there's 3, 5, 10 offers going in on a property, it means you're going to have to be competitive with your offer to get that deal done. And the reason that is because every time, say, 2 people miss out or 4 people miss out or 6 people miss out, they're all wanting to buy in this area and they're going to come back with a vengeance. So they're going to go to the next property that's similar, and therefore, again, they're going to put their offer in, and usually you're going to find that everyone goes a little bit higher. And that's really what causes price growth, is if there's high demand and I guess a bit of buyer activity, it's causing these prices to go up because people get frustrated and they get a bit of FOMO, and then the prices go up. And we've seen this in high growth locations. That's how it works. So now we have a bit of an idea of what sold recently. We've done our comparative market analysis. We understand what the market is doing. We've seen how many people are in inspections, how many offers are going in on properties. We want to start to consider, what offer do we want to put in as well? There's 2 parts to an offer. And number 1 is the price that you offer. And generally that's what I guess most sellers are most interested to hear. But the other part of it is also the conditions that you place on the offer as well. And in some hot markets, we've seen people from, say, for example, the Sydney investors that have a lot of money, they're very confident and they're very savvy with their investments. Often they actually take away the conditions. So they avoid doing a building and pest inspection. They pay a cash deposit and they have cash to purchase the home, and therefore they don't put a finance clause on it. These conditions can also be quite attractive for a seller as well. The best thing to do is ask the agent, if you can, like, what sort of conditions are happening at the moment, like what are other offers going in on a property. Some markets you might find that they're all still building a pest and finance clauses and stuff, but in a hot market, you might find that people are actually moving out those conditions to try and get ahead. So if you can have an understanding of what other people are doing. I've worked with buyers before where they've wanted to put in all sorts of conditions, and they said, can I put a condition in to fix the carpet or to actually replace the bench top in the kitchen? Things like that in a hot market is just not going to fly. You really have to take those conditions out, make it nice, clean, vanilla. So the seller will look at it and be like, yeah, I'm happy with that one. It makes my life easier and I'm happy with the price. Let's go for it. All right, now what are we going to do? We've looked at the comparable sales. We've got a bit of an idea what's going on in the market. Now we want to place our offer. Essentially, there's all different methods of sale, right? You've got auctions, you've got best and final offer, or maybe you're the lucky one to have the only offer in on a property. And sometimes if you're buying off market, that might be the case. And sometimes there may also be competition with that as well. So you really need to ask the agent what the method of sale is, get clear on whether it's just one offer and then the deal is done, or understand, is there going to be a negotiation process or the chance to come back with a different offer? Because this is really critical, and different states and different agents do it differently. You need to have that knowledge by asking that question. Now, before we looked at the comparable sales and we said that about $830 to $850 is the price for this property. Now, if you're buying as an investment, of course, you want to buy and really find value in the property. Ideally, if you can buy it at the lowest price possible, obviously you're going to get a much better result. But if you're seeing the prices are growing, then you really need to get your foot into the market at some point. So by doing lowball offers over and over again, you're going to find you keep missing out. And I've worked with buyers where they're wanting to put in lowball offers, and then meanwhile, they missed out on multiple properties, and then 3 months later, they still don't have a property, and property prices could have gone up $10,000, $20,000. Whereas if they had have just had a firm offer back from the start, they would have their foot in the market and start to capture the growth already. So there comes a time when you need to work out, when do I want to go firm, get the deal done, no mucking around, let's just knock the competition out of the park, but also let's have conditions that are suitable to get the deal done in this market. All right, now let's talk about 20 Tower Hill Road. We've looked at the comparable sales. In this market, I can tell you that there's tons of people going through open homes. A lot of properties are getting multiple offers on them, 5, even 10 offers on the property. So it is a competitive market. So looking at the comparable sales, we're saying that the property's worth $830,000 to $850,000. If you buy it as a place to live in, very different story. It also comes to a fact of like, is this my ideal home? And therefore, I want to get this deal done, and then put in an appropriate offer. And it's all about what you feel comfortable with paying, but ideally the price is going to have to be, I guess, 840, maybe a little bit higher, depending on how much competition you have. And again, it's all a bit of luck involved in the situation, and also understanding the mindset of the other offers. But generally, this is the way that we work with our clients, and it's how we do get deals done. The ideal scenario is you want to get the deal done, you want to have conditions that are favorable to you, but you just want to be like marginally ahead of the next offer. And if you're, say, $3,000-$5,000 ahead of the offer, even if you're $10,000 ahead of the next offer, you've got that property done in your portfolio, or it's your new home, and you've now got that for however long. And now that property is yours. So you don't have to worry about, I guess, dealing with the stress with property prices going up. Now with this, it's a little bit of an art, it's a little bit of a science. And when it comes down to it, it's about your risk profile as well. And the ideal scenario is you don't want to pay too much, but you don't want to keep missing out. But if you've got a fair idea of what other properties have sold for in the past, and even if you're a little bit over a recent comparable, then in the long run, an extra $5,000, $10,000 over the scheme of 10, 20 years, or however long you hold the property, is going to be absolutely minuscule. We've come to the end of the podcast, and today I've given you an overview of what's driving the property market. Why is it just crazy? You go into open homes and there's tons of people, and it's scary because if you can't buy property, you can't get into the market. What does the future look like? And I recently spoke to a couple who are in this exact situation. They've got an upcoming first home purchase and they're really worried about getting into the market. In today's episode, I've covered how you can actually value a property in 2 minutes. This is a very basic format. And of course, there's bank valuations and there's more formal evaluations, but I've given you a really quick snippet of how you can get a quick overall picture, which is going to be way more accurate than getting an online estimate, because those tools are absolutely useless and they don't mean anything, especially in a high growth location. And finally, I've talked to you about how any rookie can help start to formulate an offer and put it into an agent by firstly asking the right questions and being, I guess, firm, being assertive and putting in an appropriate offer without going crazy, but without missing out. Now, if you've had experiences with buying property or putting offers in, and this actually resonates with you, I'd love to get your comments. Pop it in the comments, share your story. And if you have any questions about an upcoming offer you're looking to place on a property, also feel free to ask the questions and I'm happy to help. This is what we do on a day-to-day basis, and it is a little bit of a game buying property. And sometimes there is a little bit of back and forth, which I haven't covered today, but in another episode, I'm going to talk about negotiation, because often it does take a little bit of back and forth to find that happy medium between the buyer and the seller. Well, guys, it's been great having you here again today. Greatly appreciate it if you can subscribe to the channel so you can get all the latest updates. It also encourages me to produce more episodes to try and help more people buy property and get ahead. Well, again, my name is Steve Williams. Great to have you here. And until next time, let's rentvest and get ahead together. All information contained in this podcast is general in nature and does not consider your individual circumstances. You should consider the appropriateness of this information with regards to your individual objectives, financial situation, and needs, and speak to a professional.